Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, June 12th, 2025. It's 3:42 p.m. Eastern Time, so the markets aren't yet closed, but as I mentioned this morning, I had to go out. I had had an appointment today, some things to do, and then I just kind of tagged on some errands and took most of the day off. So I'm back at my desk now. Going to go over the charts and just show you some of the things I'm watching. I have a watch list of various indexes and sectors. I want to go over that. There's so many similar charts, and the analogy I'm going to give to this market, I use this one once in a while, talking about on the site, is that when you have somebody standing on the edge of a pool, the old prank as a kid, you'd see your friend standing there, and it just needs that slight nudge. And what this kind of image does to me, it just shows it takes such a little energy, a catalyst, kind of a similar to the way a bullet works. You have a primer and a cartridge. If you know how firearms work, there's a little primer. The hammer strikes the primer, which is a tiny little charge at the base of the bullet. That then it takes that little tick from the hammer. It ignites that primer, which is again a small charge, which then ignites the big load of gunpowder in front of it and releases a tremendous amount of energy fast. So when I see this, same kind of thing. The little girl she could have done it with one finger, and you take that stutter step, and then the momentum's there, and then you go. That's what I see most likely to happen to this market soon, and it just needs that nudge. Let me reiterate: we have the sell signal, we have the bigger wedge here with the breakdown yesterday. There's that red candle and a follow through today. The QQQ is green right now, but I'm going to get to that. There's a sea of red when I look at my top, the most important stocks. I have another watch list I call the TTW things to watch. Various stocks. I'm going to go over a few of them, such as Paychex, some big payroll companies, and ADP. We'll talk a little bit about Boeing. Unfortunately, a lot of people lost their lives today in that crash. And that's kind of a follow up to a question. When I was at my appointment earlier today waiting, I saw somebody ask something, and I'm on my phone. I can't reply. It takes me forever to type. I'm not like the young teenagers today that can fire off with their thumbs. It takes me about an hour to write two sentences. So I'm going to answer that. And that was how to profit from a lot of the mayhem and chaos that's going on with the Trump deportations, what's happened in California. And I've read the comment thread on the Wall Street Journal on that crash today, and a lot of fingers being pointed at Boeing already. We don't know if it was pilot error or Boeing or not, so I'm going to get to that one too. All right, just to reiterate, this is the 60-minute bearish rising wedge right here. We had QQQ was as a active, a shorter term typical swing trade was first highlighted right here, right before we broke this trend line. That was the first sell signal to come. In pre-market, went a little lower than what you see here. We hit that first target, bounced as expected, and we've set up in this wedge type pattern. So the divergences, this was a divergent high, and those divergences not only have not been taken out or negated, they've gotten even larger, which typically, there are no guarantees, but the way it works is typically the bigger the divergence, just like the deeper a more overbought or oversold a security becomes, the bigger the reversal. And so if you just kind of strip away, just imagine I stripped away all those lines, draw them in here. This is the trend line. There's the bigger rising wedge. It's a breakdown. And one reason I think we need that nudge, we broke there. The futures are just dancing all day since I went out this morning. We've been dancing right on the trend lines. I'll get to those in 1 second. But what we need to do to get that final nudge, that push, I talked about it in yesterday's video. Remember, I was highlighting we were just breaking down on QQQ, and then I got to the futures. They hadn't broken down yet, so I said you need to see that. They're just right there. And then I also repeatedly say there's two indexes, and I need to see them both break down because it is a mathematical impossibility to see QQQ have a big drop. We're talking, high single digits, double digits, without SPY also doing so, and vice versa, simply because they have, even though they're different indexes, they're both large cap indexes. They're both, and the top holdings are the same. And so they have a high correlation. You know that. They go up and down, not in exact lockstep, but essentially in near unison. due to the fact, again, it's just two indexes covering large cap stocks, mostly US based. So this is it. SPY right here. When I click over to the S&P 500, that's what, here's that little nudge we need. It's the identical or almost identical pattern. You have the wedge right here, the primary wedge, which QQQ is still on. Remember, as I covered in yesterday's video, a few days, SPY broke down and was back testing and is kind of peeled out into this little sub wedge here, just like the futures. And so that's what's going to have to go right now, because so far we tested it this morning. You can see I'm tightening up this trend line. I'm just coming in, I'm tightening it up, meaning I'm coming in to catch all these reactions right here. And so I think that's it. So I do think there's a lot of dry powder. If the catalyst comes in here, again, it's a handful of things to watch, pretty much 4 things to watch: SPY, QQQ, ES, and NQ. When they all clearly give way, that's probably when we'll get that, selling will begin to accelerate, and we'll have the headlines will be the biggest down day in months or something like that. Will probably be a quick drop. Again, my focus is on QQQ. It's the better trading vehicle. You get more bang for your buck on the upside when bullish and long, and on the downside when short. So just to recap, T1's already been hit. Doesn't guarantee we won't have another reaction there, but it does tell me that check mark has occurred. And so when we go down there, if and when, whether we or when we break it, if and when we break it, that's going to increase the odds we go down to these additional targets that I gave you. So, all right, let's move on. I want to cover a lot of stuff. Let's just go to the futures. Like I said, this is that chart I gave you this morning right before I left on pre-market. Just wanted to get out to you quickly. There was the initial trend line, break and back test, rejection. Right here, I said we have to break S1 to trigger another sell signal and open the door to these deeper targets I gave you. We didn't break it. We're still above it. And then it set up this, just like SPY, I just showed you this other wedge right here. And again, this shows you there was strong momentum here. We were long and strong off those lows. That's where the bulk of the gains were made. Things started slowing down here, and that's what the momentum indicators are telling us. Momentum is waning as prices are going higher. There's fewer and fewer, less vigor, if you will, in the buying. And that's it. So boom, sell signal, next, a solid break here. That'll coincide with SPY. Not going to be today. There's 10 minutes left in the close. Before the close, it'll be tomorrow. And then that. All right, so that's NQ, and then the last one is ES. Again, I'm going over the futures as well as the, this is a 6-month chart with 2-hour candles. Was that on the NQ as well? No, 3-month chart, 60-minute candles on NQ. 120-minute chart, very similar, just every candle's 2 hours instead of 1. There's that little sub wedge right there on ES, the S&P 500 futures. Again, you had sell signal 1 there, drop, hit this secondary trend line, and just like SPY that I just showed you, back testing, and right on the line right now. So to be continued tomorrow, pretty much is it, and that's that. Okay, as promised, now I'll just go to let's talk about Boeing. And again, the person that posted that was very sensitive. There's a lot of things going on that, maybe people are suffering. Again, this is a plane crash, but this is Boeing. And the reason I wanted to talk about it, I'm not, first of all, I was gone till right now. And this is a pretty big move. And, and that person said they don't want to capitalize on anyone's misery too in that comment. I get that. I'm just showing you the charts, because this looks just like the stock market. We had these initial uptrend lines. Remember a few weeks back, I said I wanted to see break on SPY, QQQ, as well as the top handful of the largest sectors in the S&P, and they did. And then they broke down, triggering that sell signal. We had a little slight, so far, kickback rally, which is perfectly normal. Sometimes you break down and don't look back until your first, major support levels are hit. Sometimes you break down, you have a kickback rally. And what was lacking, as I said, as well as in the indexes in most sectors, is this negative divergence, which makes even a better case for a significant reversal. And so Boeing, it took quite often, and I say this, the fundamentals, i.e. news headlines, earnings reports, things like that, will coincide with or be the catalyst of, or even the technicals sometimes trigger first and then the fundamentals come. The news comes as you read it. See, be careful there. What I'm saying is, quite often, for example, nobody's going to argue that the 5% drop in Boeing today wasn't due to the plane crash, right? However, it was priced in we were going to drop. In fact, I have another example I'll show you here. The same very airline, and if you want to read this post, it goes back from, the trade started back, but I posted this in 2020, really right before COVID hit, right before I even knew it was a thing. And by the way, I heard there's a bad strain going around. I had company in town this week, just got back to South Carolina, and one of my friends said he's got COVID and started nose sniffing on the drive home. So hopefully I don't get that. It said it's a bad one too, kicking his ass, just kind of FYI thing. Anyways, here's Boeing, the anatomy at top. And I just to recap this, what I said back then, long before the first of the 737 MAX issues began, I highlighted Boeing as one of my favorite short trade ideas. This is a chart going back from, that's February 15th, 2019. And I highlighted a beautiful megaphone top pattern, which is also known as a broadening wedge pattern. That's when it looks like this, just like a megaphone right there. You also had uptrend line, a wedge there, a breakdown. So my beloved big wedge on the weekly time frame as well. You put in a divergent high, you had a shot across the bow, just like with the markets now. And I'll get to the chart in a second, the bigger version. I can't really zoom this right now. Oops, let me go back. And what I'm showing you here is how it was priced in. I was calling for a major top in Boeing. And I remember clearly at the time, the bobbleheads on TV were coming out just drooling over this stock. It was at all-time highs. How could you not love it? Performance, Boeing, blah, blah, blah. Planes building, the world's getting bigger. All these third world countries, China and India, are starting to get money and order planes and blah, blah, and the stock can only go up. But again, the technicals told me to make a major counter trend call on it. It was going down, added as a short, went on to follow up with these charts. There was the megaphone pattern. There was the second divergent high. Again, DH1, big drop, just like the stock market recently. That was a 23% drop. Then it went on and made a new high. However, that new high was a marginal new and still divergent high. Then it set up here. Stayed on it. Next sell signal to come on a solid break or weekly close below 317 would come on down. And this is calling again for at the time, it was if not one of the most beloved, it was the NVIDIA, if you will, back then of the stock market. And I was calling it from 330 to be cutting more than half. You can see that target right there, 150 off. And I was calling it off also off these highs in this broadening wedge. Then you got the sell signal. All right. And you can see also, the same wedge right here. I'm just showing you, I'm jumping through. This was now in January. You had that megaphone pattern. You had the primary uptrend line here and breakdown back test and then key support. And that would be the catalyst to take us down there. So let's just jump over to Boeing now. That was then, this is now. We got to go to a weekly chart. And there it is. So although nobody, even the Boeing exec, well, that's the thing, guys. That is the thing about technical analysis. Somebody always knows when there's something cooking. Little birdies start flying around, landing on people's shoulders, and passing along information. We all know this. There were criminal charges brought against Boeing, or civil charges, and maybe criminal. And they knew they rushed the process on the 737 MAX. And so long before the first crash, this stock had peaked and was going down. And so my point is that those in the know, insiders tell friends, family, and usually the technicals quite often will first start indicating or signal a stock has topped or will top or is near a top or bottom. Then the news follows. Then then the plane started crashing, and the rest is history. More than I think was up 2-3 crashes. And so that's it. It's gone full circle. And you can see, again, technicals, divergent high, big double-digit drop, divergent high, big double-digit drop, divergent high recently, big double-digit drop, divergent low, rally. And so this is my weekly chart on Boeing. So I'm sharing it kind of more of a, again, you can trade Boeing if you want. I don't have a position. I don't care to short it right now. I don't, we'll see. Maybe it's pilot error. Maybe it's a bad plane. Supposedly this model, I think it was a 777, has a really good track record. So again, I just kind of wanted to share that analogy with the stock market currently, the similar technical posture, and this one's now started to play out, and it took a catalyst, and a catalyst in the stock market. Let me jump over to SPY. Almost an identical chart. When I say that, I mean you had a first primary uptrend line, the one I was highlighting a few weeks ago, break down there, but you didn't have a divergent high. Now, just like Boeing, you have almost an identical pattern there with a divergent high. And so what you need is a little spark. A catalyst is when you take a match and you strike it on the striking plate. There's some chemicals in the tip of the match that spark up and ignite the rest of it. That's a catalyst, just like the hammer hitting a bullet. And it can be one of anything, or sometimes it doesn't take any news catalyst. There are many times I've seen the bobbleheads on CNBC come out and say, they rarely put their hands up and say, we have no idea why the Dow's down 400, 500 points today. Almost never. They can take, and they will. I've made this promise so many times in the past, and it's happened. They will slap a sign of cause onto any big move up or down in the market just because they want to look competent. They don't want to say, we have no idea why the market went up or down today. And the funny thing is, so many times it will take the same exact reasoning, the same headline that they used a week earlier for a big move up, regurgitate that, spin it around to somehow now be bearish. In other words, the same tariff, this, that, or something to do with a greater chance of an interest rate cut. The market, when it wants to rally, it'll take things that change your trajectory or the expectation of Fed rate cuts bullish when you have bad news on the economy or whatever increases the odds of a rate cut. Sometimes a market will rally, but then all of a sudden there'll become a point where when the hard numbers start to clearly turn, bad news will be bad news. In other words, the main thing is job. You're just going to see, we saw a little uptick in the unemployment claims today, I think. And so then you'll start to see bad news at some point actually act as bad news on the market. And that's when you know the next downtrend is most likely upon us. And in other words, in a bull trend, good news is good news, and bad news is spun as good news or ignored. And in a true downtrend, the opposite happens there. So there are your levels. Let me cover now. Let's see. Oh yeah, let me give a couple more stocks, then we'll just rifle through those list of various key sectors and indexes that I have. ADP, biggest payroll processor, kind of a tell, if you will, on the board. Sorry, I'm reading this board 8 clean. Let me go to board 8. On the job market, board 8 is a clean board, so I don't have so many annotations. You can see what it looks like to me. This is negative divergence. I highlighted it back here. Just like Boeing back when it had that major top before the biggest bear market it's had in decades, had a divergent high, had a shot across the bow, a big drop, just like ADP. ADP went on just like Boeing did back then. In fact, look at that. Wow, I didn't even see it until now. It's a perfect megaphone pattern, just like back then. And so what this was, that was a divergent high. This is simply a secondary, or it's an extension of the same divergence. So it's not a separate, it's just a larger divergent high because the divergence is extended with the indicators going on to make equal or lower highs with prices making higher highs. And now it's already started to come down pretty hard there. And this divergent high is comparable, was a little bigger back here in scope. It was comparable to this one right here. And that divergent high back then, ADP fell, that was before the bear market of 2022, 2023, right around the highs, fell about 30%. And so I wanted to highlight that one. Again, this is a daily chart. Let me click back to this board. I have this uptrend line. Let me go back to, all right. We'll just leave it on the clean board. So you can see right now, there's some minor support levels along the way it's going to bounce on. But to me, the selling's been pretty impulsive so far. You typically, on ADP, if the job market's hunky and dory and in good shape, again, the little birdies know, those that work at ADP see the numbers coming in before they announce their quarterly earnings report. And although they're not supposed to trade on inside information, they do. And insiders are actually can legally sell their stock. They can cite any reason they want. It gets a little skitty off. They'll do the planned selling. Either way, that's a pretty aggressive drop with the stock market threatening to break to new highs, comparable to that drop there, which it signaled the big drop that we had earlier this year. And really, only other time I see here off a high right there is comparable to that drop right there so far. And again, we had a shot across the bow first back then, right? Just like we had a shot across the bow here. And that went on. That was a divergent high with an additional second larger divergent high. Then came the bear market. Okay, so there's that one. And its partner in crime is Paychex, another big payroll processor. There's my chart. There's a bit of a busy board, but you can see the primary uptrend line's right here. We hit it here, and we hit it here, and we have this big, just this big divergence. And thing about it, and I know people kind of give up on this stuff. You know, when I'm analyzing charts based on the long-term outlook on a daily or weekly or even monthly chart, those are, I'm highlighting conditions that have been building for months, in some cases years, and therefore can continue for some time. You got to get that sell signal or evidence of a top. So this one, we built divergence for quite a while. Then the top came on Paychex, ended with this bullish falling wedge right here, positive divergence. So these are your trends. These are your trend changes. And this one's been building really from this point right here. And yeah, about right there as well. So that's your divergence. That's where I should have the divergence line starting in line. Yeah, right there with these peaks. That's more accurate. That's where your divergence started. So it's comparable. It's almost identical, if you will, to this divergence back there. And from that point, Paychex fell roughly 27%, something like that. And so you can see, oh, and there's the sell signal. It just came recently. Got a nice clean, just like the stock market. You have this uptrend line off the lows, divergent high, and this one's been going down. So those are two to watch as kind of tells, if you will, on the economy. And the other ones that I'm watching, and they're actually active trades right now, are MasterCard and Visa. Still look good. They're just sometimes you break down and that's it. You don't look back. We had the sell signals recently. And sometimes you break down, you'll have a little kickback rally, maybe even put in a marginal new and still divergent high and then go down. So there's MasterCard. I think officially you can trade them all. They're going to move together, birds of a feather. I'm talking about MasterCard, Visa. There's our sell signal. It's just been back testing and actually rejected today. It back tested for 2 days after the sell signal recently that I gave you. And there's the kind of a rejection. Not hard. What I like to see, the problem with back testing, I often say this, is you can continue to back test. And when you're short, when you're doing a short trade, a sell, then the problem with back testing is you can continue to back test for a while. And there are no guarantees that you don't regain the trend line. That's when you throw away your hand. You say, stop out, it's not working. But as long as you're there and give it a little room for an intraday or one-day spike above. But the problem is you can continue to back test for a while and an uptrend line has a positive slope, meaning prices come in at higher and higher prices. So what I like to see is whether it's on the initial back test or 2 weeks of back test, I like to see a big red rejection candle. That usually seals the deal and tells you here's a case. There's a back test right there, rejection candle, but a big red one the following day, and that set the trend. That started the trend last time on Visa on the way down. So that's it. So I just wanted to reiterate these trades still look as good as they did the day we took them, which is, again, we had this one as official trade. There was your sell signal on American Express yesterday, followed through today, no back testing, going down. Yeah, price targets there. Again, large targets, the wider the target you're picking, the wider your stop can be. So if you're shooting for that 40, actually about 40% from the breakdown drop, if you did a 10% stop loss, that would be a excellent 4-to-1 risk-reward ratio. But if you're only looking for a quick pullback because you're bullish, you think the stock market's going much higher, more than anything, more than a marginal new high. You can buy pullbacks to my first target, cover that short, and or wait to go long there if you don't like shorting. And that will also come in with the 200-day moving averages, which are right here. Dual support. However, if and when those break, T1 goes, especially T2, it's lost some major support. And that's going to increase the odds we're going to my larger targets. Okay, here's my indices and sectors. They're in no particular order. In fact, what I'm going to do right now, I'm just going to sort them by gainers and losers for today. And I'm going to go over, there's a total of, God, there's 50. I'm going to rifle through them fast because some of these are things people want updates on. There's GDX. Hopefully I have the dollar in here. And you know what? I'm going to cover the dollar real quick. It had a divergent high there. We took a short. We hit our second target there. Bounced as expected. That was on the 60-minute chart. Remember, right here. And we hit it in pre-market to the button. Bounced. Still higher, a larger divergent high. I'm going to show you the dollar real quick. I think the dollar is poised to bounce. When we did that GDX trade and the goal, it coincided with the dollar coming to support. I gave you this long-term trading range on the weekly chart. Told you we were falling to major support. I expected a bounce. I gave you a first target right here, and that's exactly where we went to. That was that drop. That's what took us down to T2 and GDX. And allowed us to hit the second price target and cover our shorts there. That was my preference because we hit resistance here, we hit support on GDX, and this is where I expected a reaction on UUP. Now we're down here, but look what we have. We have potential positive divergent. Potential because we're very close to making an equal or marginal new low. So even if we undercut it a hair, just like the stock market, it is guaranteed to be a divergent low. Well, the market will be a divergent high. And that will most likely set the stage for a nice bear trap, false breakdown. And if you get back in here, we'll probably run back up, hit that first target again, and then probably pop the downtrend line and continue to run. If that happens, remember, gold and the dollar tend to move inversely to one another, as evidenced in that last trade we had there, which was the inverse of this, again, in GDX. So there's your update on that. Again, I'm going in no particular order, just how I have things on my watch list. It's off the screen. You can't see it. I'm just clicking on indices and sector watch list. Gold, I haven't given you a lot of updates, as I've been telling people, because we're gone nowhere. It's like I said the other day, it's like updating the weather in the Saharan desert. It's going to be very hot, sunny, with a very near zero chance of rain. So there's no reason you can't update anything that's going sideways because there is no update. However, if the dollar rallies, that's probably going to have gold break down below this uptrend line. Especially if it's a significant rally, that was that last drop in the dollar or rally in the dollar. And so if if the dollar holds support and really starts to get some traction to the upside, you'll probably see gold break down there. That's my guess there. XLU, utilities, it was a short trade back here. We hit my first and second targets out of 3 targets. But if you remember, I was covering and posted the morning of the lows. I think it was April 7th or 6th in the comment section. Somebody asked, and it was as clear as I could be. Covered all shorts going to a full long position. That's not a partial long. And so that was then, and that includes everything on the site. So a lot of things reversed, a little shy of my next targets because the markets, for the reasons cited then, the risk reward was skewed to the upside and we're likely to bounce. So, however, where we come full circle, last time we shorted it was off that divergent high, and that's it. So what happened? Is the divergence taken away? Nope, the divergence is even larger. We had the divergence right here. Let me grab my line tool. Negative divergence there. Gave us that nice short there. And the divergence now that we've made an equal high. And if we go a little higher, it's still going to be intact. We'd have to go a lot higher to take this divergence out. I don't think it'll happen. Utilities are a defensive issue. I don't care to short them right now. I think there's more meat to be sheared off the bone in many other sectors. These are typically defensive issue stocks that do well during a recession or economy, or at least relatively well, hold up better than the broad market. This is a sector I have in there, DJUSSC. That's the Dow Jones US Semiconductor Index. Looks a lot like, and it should, a lot like the stock market or the NASDAQ 100. Beautiful. It's the only word I can use to describe that. I hate the way that Trump hijacked that word, but it looks like a beautiful, it was, I'm sorry, a bearish rising wedge, breakdown, back test, did all that. I think we hit, yeah, we did. We hit my fifth and final target on the trade that we had for the semis then was SOXX. I covered that in multiple videos leading up to that drop. We hit the primary uptrend line. This is just the SOX Semiconductor Index Fund primary major secular bull market uptrend line. Bounced as expected off there, like everything else was expected to bounce. Then there was that, it was that sixth and final target. I initially created that target back in late 2020, August of 2024. And that was my final target. It came in with the trend line. So there was about 101 reasons for the semis to bounce along with the market. But now, and this is that uptrend line. Again, I just showed it to you on the other one. I'll get back to that because this wasn't in that watch list. It may be. I might get to it later. Sometimes I have some duplicate sectors and all that. But there's a beautiful bearish rising wedge. Let me go back to DJ USSC and go back to that board there. That's it. So a little bearish rising wedge. And so the point of this video is that when I started, a little nudge in the bull, there's so many sectors. Again, some things have broken down, but the biggest ones and the collectively need to see SPY, ES, NQ, QQQ, the semis. Once they break these, it should be not a tidal wave. It could be a pretty fast sell-off. But I think you'll see a lot of the flows will change quickly. The computers are going to go from the buy programs to the sell programs in pretty short order. Stops will be hit. People start booking profits or taking losses for the Johnny-come-lately longs that are just piling in. There's also some major resistance. This is where the semis have peaked for years now. It's a sector that's really been stalling out. If you look at it this way, it's a big, to me, looks like a massive topping pattern. And again, you can go to, believe me, just look at a weekly chart. A weekly chart will paint the big picture, and you can see just it's a bubble. This is a cut and paste AI, put it back on 1999, and replace it with .com, and that's what you got today. It's the same thing. So in the semis, it was particularly just a handful. Really, NVIDIA is driving this sector the most. All right, so that's what needs to happen. XLK, the tech sector, I've highlighted this one recently. It's basically a mirror image of QQQ. This is how it looks on the 60-minute chart. And like QQQ, you got to zoom in to see it. It's no fireworks, but it's a breakdown, a back test, and so far a rejection off there. It is a sell signal like I posted this morning. That's it. So we'll see if it either plays out or it doesn't. But it's going to we need to see SPY break down the comparable trend line to start getting that selling going. This is Spider SPDW World. So this is the S&P Spiders S&P Standard and Poor's World Index ex US. So it's everything else besides the US. And everything that I've known, I'm talking about interest rates, the fact that interest rates are pushing multi-year, actually in close to multi-decade highs, and the market's ignoring it. Everything I've learned, I'm a business major, economics, finance background, former stockbroker. We know that rising rates are bad for the stock market, bad for the economy. It's being ignored for reasons, as most in bull markets, fundamentals, everything starts to get ignored at the top. It's a frenzy. It's how all bull markets end, with a big bang and everybody, the retail crowd piling late. And the other thing is, the undisputed GOAT of investing, Warren Buffett, now retired, as you know, just recently, but he's been quoted many times as saying that tariffs are pretty much comparable to all-out war, nuclear war, and there's no positive spin. And so this is just wonky, that in what I think it is, as the analogy I'll give, when Trump announced the tariffs Liberation Day, I mean, he ran on them, announced them, the world freaked out, everything went down. But he did the old, as he does, comes in crazy, talking 150%, these crazy number tariffs, China, even around the world, slap blanket tariffs on every country. It's kind of like going to the doctor and with that lump on your breast or whatever it is, and the doctor says, oh, bad news. You got a very aggressive terminal cancer. You got about, a couple months to live, get your affairs in order. And so then you freak out, right? And then you go back and, oh, guess what? I was wrong. I read the pathology wrong. You just have a a low grade tumor, or which is very treatable, or just a cyst. And so it should be you should be back to your baseline. Maybe you have to deal with, and that should be actually. So let's stick with that low grade tumor, not the benign, a low grade malignant tumor. So there's no positive spin here, but I think what happened, the psyche of the world, and most investors are, oh my God, we were going to go, Trump was playing such hard ball, the world was going to crash. And that's one reason I emphatically was stating he's going to back down. He's going to cow down. This is not going to stand. China and U.S. are the two biggest economies in the world. It would be comparable to thermonuclear war to have them, completely stop trading with each other. It would, the world economy would come to a screeching halt. So we knew, I knew, and I think smart people knew, and they bought and then rallied up. But now, are we off any better? The rest of the world, look at this, blowing away the U.S. At minimum, these tariffs are not over. We're only just beginning, and this is going to be a back and forth. And if anyone thinks it's going to be any more favorable for these companies, I'm just speaking from a pure fundamental. This logically doesn't make any sense right here. At best, we should maybe have retraced half of what's going on. We know that tariffs are going to continue on, especially a lot. It's going to impact a lot of these non-U.S. companies more. But either way, so there's going to be opportunity there. In this video, I'm not going to get into that.